Bitcoin is on the move, setting new highs every day. Will Bitcoin eventually break through the elusive $20,000 barrier after officially reaching a new all-time high in terms of market cap, or will we first see a major correction? When gazing at the weekly Bitcoin chart, it's difficult not to become excited. Bitcoin has experienced a true parabolic surge in the last 30 days. However, it has yet to recapture its former all-time high, which is only 10% away. However, as the saying goes, what goes up must come down, and the question on everyone's mind right now is, when will there be a correction? The Fibonacci retracement levels doomsday scenario portrays a grim picture of a 50% fall to about $9,000. Is this something hodlers should brace themselves for in a post-halving bull run, or will earlier resistance levels serve as support on Bitcoin's ascent to the moon? While you're watching, guys, don't forget to give this video a thumbs up and also click on the subscribe button to get more amazing content like this. With that being said, you should know that 2021 Bitcoin bubble has burst and technical indicators point to a downward trend. The recent Bitcoin rebound to $40,000 in my opinion is merely another example of a bear market dead cat bounce. Investors considering shorting the Bitcoin bubble might consider entering around the $45 to $50K range. If Bitcoin breaks through the $45 to $50K resistance with strong momentum, I believe Bitcoin bulls will re-enter and positive momentum will last for the foreseeable future. My short position has a target price of $30,000 and a target price of $20,000 where I'd cover my shorts in tranches. Understanding the technicals is almost as crucial as understanding the fundamentals when trading a speculative bubble like Bitcoin. So what happened to Bitcoin in May? The price of Bitcoin is following the classic market psychology chart. At the present, Bitcoin's macro trend plainly indicates that it is in a bear market and Bitcoin is in the market's denial phase. Many Bitcoin influencers on YouTube and Seeking Alpha are entirely dismissing the severely bearish technicals and arguing that this is a normal amount of correction and that Bitcoin will roar back to an all-time high in a matter of weeks. Even though that is plausible, I believe Bitcoin will go back to the $15K range because of severely bad fundamentals such as government regulation, ESG concerns, altcoin dilution, Musk's U-turn, and a terrible chart pattern. In reality, Bitcoin is now far closer to $0 than it is to $100,000. In this video, I will discuss what I believe to be the critical resistance level that both Bitcoin bulls and bears should consider before making any judgments. So, numerous questions must be answered to clear this table. The first question is if the $40K thin resistance is merely a dead cat bounce. After a stunning $40K to $30K drop in recent weeks, Bitcoin was able to bounce and regain its losses, returning to the $40,000 milestone. However, after reaching $40,000 with strong bullish momentum, Bitcoin lost impetus and has been lingering around the $40K resistance for the last several days. Bulls appear to want to break the $40,000 barrier, but there is a lot of selling pressure that is constantly hammering down the bullish momentum. If the $40,000 resistance is broken, I believe Bitcoin will quickly go back to the $20 to $30K zone. This $40,000 level, I believe, is a key short-term obstacle that Bitcoin bulls must hold over the next few weeks. This is because during the February bull market, $40,000 was a critical technical level that required numerous efforts to break above. In my opinion, the bulls were able to break over that resistance due to Elon Musk and Tesla acting as a catalyst, with Tesla purchasing $1.5 billion worth of Bitcoin. If Bitcoin can hold above the $40K mark, it has a good chance of rising back to the $45 to $50K range. The $45 to $50K region, I believe, will be the most crucial key resistance that will determine Bitcoin's fate. The $45 to $50K barrier level is significant for both bulls and bears to remember for two reasons. First, this range was the key resistance that Bitcoin bulls had to overcome several times to break this March. Second, during the 2018 Bitcoin cycle, Bitcoin fell below $13,000 before rebounding to $18,000, representing a 50% dead cat bounce. Furthermore, after the big drop around this time, altcoins rose by nearly 70%. Using 2018 price movement as a guide, a 50 to 70% rally from $28 to $30K would result in a 2021 bottom bottom of $45 to $51K. Another important question to be answered is whether the Bitcoin bubble can last. If Bitcoin breaks past the $45 to $50K line and continues to rise to the $55 to $60K mark as we saw during the Bitcoin surge in the first quarter of 2021, I believe it has the potential to extend its bull run to $100K. Because Bitcoin has no cash flow, dividends, yields, or use case other than speculation, its price is entirely determined by what someone else is prepared to pay. This indicates that the upside is limitless, and any price above $0 represents an overvaluation of Bitcoin. I believe that to profit from a bear market, investors should short the rips and cover at crucial resistance levels. As I previously stated, given the technical trend, I wouldn't be surprised to see Bitcoin reach $45,000. However, given the bearish fundamentals and weak momentum that I've been watching, I don't think Bitcoin can hold the $45,000 level for long. Bears, I believe, are more likely to drive it back under $30,000. I believe $45K is the price at which investors who wish to bet on Bitcoin's continued decline could begin shorting it. If Bitcoin falls below $40,000, I believe the significant downside resistance levels will be around $30,000 and $20,000. Depending on the time of purchase, I believe Tesla purchased Bitcoin for $29 to $31K. Elon Musk may issue positive tweets to defend Tesla's cost basis, or Tesla may liquidate its Bitcoin holding as the Bitcoin price approaches the cost base. Even if Elon Musk decides to defend Bitcoin on Twitter, I believe Elon Musk's Bitcoin pump is losing effectiveness. For example, Elon Musk's recent encouraging tweet on Bitcoin miners only increased the price of Bitcoin by $1,000 to $1,500, and the surge faded quickly. If Bitcoin bearish recognize that Elon Musk is no longer a danger, they will short Bitcoin more aggressively, causing the price of Bitcoin to plummet still again. After breaking through the $30,000 resistance, I predict Bitcoin to fall to the $19 to $20K level, which corresponds to the height of Bitcoin's 2018 bubble. At this time, the risk of shorting outweighs the potential benefits, so I intend to cover my shorts. Let us also consider the risks involved here. Bitcoin is a speculative bubble that is being propelled by illogical market psychology. Before shorting the bubble, investors must establish a clear stop loss and target price, as sudden swings in Bitcoin values could compel a forced liquidation. My primary concern is that an unforeseen trigger occurs out of nowhere, causing a 20 to 30% increase in Bitcoin values. I believe that investors with a high risk tolerance should short Bitcoin. Other investors who are not willing to take this amount of risk should wait on the sidelines and sell their Bitcoin positions, as I predict the price of Bitcoin will fall significantly from here. There are also claims that Bitcoin has dropped more than 50% in less than 3 weeks. Bitcoin has repeatedly failed to defend the $40,000 barrier level after bouncing back to the $3 to $40K range after falling below $30,000. The Bitcoin bear market is most likely not done, and it might fall significantly further from here. I believe that retail momentum and unique factors are driving Bitcoin. As a result, to benefit from Bitcoin trading, you must be a quick technician who understands significant technical patterns and market psychology. During May, both Bitcoin's chart pattern and catalysts were exceedingly negative. The macro chart pattern demonstrates unequivocally that the Bitcoin bull market has ended. During a bull market, investors should buy the dips and try to climb the mountain higher. But during a bear market, investors might consider shorting the bubble and gliding down the mountain rather than climbing up. Based on the past dead cat bounce of Bitcoin and other cryptocurrencies in 2018, I believe the major resistance is $45 to $51K. I believe that this $45 to $51K is a critical entry place for Bitcoin shorts. If this crucial barrier fails and Bitcoin falls even further, my targets for a short position would be $30K and $20,000. Thank you for watching to the end. What do you think about this Bitcoin warning? Do you feel Bitcoin will eventually plunge below $20,000? Let us know about your opinion in the comments section. Also, don't forget to give this video a thumbs up and do well to subscribe too. Bye for now.